Hi, this is Tony Sagami. I want to talk to you a little today about a new report that came out from the International Monetary Fund. The IMF publishes a twice-yearly publication called the World Economic Outlook. And the IMF has a pretty good handle on what's happening around the globe. They have an army of economists stationed all over the world, and they get some of the most important and inside information from governments to compile their data. So what they say is usually fairly accurate as far as data can be trusted. Nonetheless, what they said in this new report was that they predicted that China's economy would surpass the U.S. economy by 2016. Yep, China will become the world's largest economy in the world. And that's just 5 years away. Now, you're probably going to hear a lot about this during the election time. Already, Mitt Romney and some others have brought this up as an example of why we need to do something now. But the IMF said that China's gross domestic product is going to grow by $8 trillion in the next 5 years to $19 trillion. The U.S. GDP will also grow, but not by much, only by $3.5 trillion in the same time frame, to only $18.8 trillion. So yes, China will have a bigger economy in dollar terms than us. Now, total GDP is not as useful as a metric as GDP per capita. You know, even if China and the United States had the exact same GDP by 2016, I don't think anybody would argue that the United States is a more prosperous country because we'd have 4 times the per capita income of the Chinese. That's a pretty powerful tool by itself, so I'm not saying that the U.S. is doomed. But at the same time, the IMF does expect America's share of the world production output to drop to 17.7%. That's the lowest in modern times. China's is going to grow to 18% and continue to rise. To show you how far China has come, back in 1980, it only produced 2.2% of the world's output. So you can see it really has grown. Already, China is the world's largest producer of gold, rare earth metals, steel, coal, copper, not to mention cheap t-shirts, tennis shoes, and counterfeit designer goods. Now, at the same time, China is the largest trading partner of several countries. Russia, Japan, South Korea, North Korea, Taiwan, Hong Kong, Malaysia, Brazil, Australia, New Zealand, Thailand, Vietnam, Iran, South Africa, Angola, Sudan, Libya, Morocco, Cameroon, Ghana, Mongolia, Kazakhstan, Cambodia, and Bangladesh. So China is growing as a world power, commercial power, which is an amazing thing for a communist country. And the point of this is that you need to make one very important decision. It's the most important decision you can make, is you have to allocate a good portion of your equity portfolio to Asia, in particular China. That's where the growth is. Most of the people I talk to have the majority, if not all their portfolio, in U.S. stocks, and that's a mistake. The IMF may be wrong about the numbers and how long it takes, but there's no question the fastest train that you need to jump on is the Chinese train. Until next week, this is Tony Sagami signing off.